Well, the stock market is in the pink of health.
India now has the DPI, which is exemplary and is setting the standards globally.
I'm an academic. I'm not an astrologer or a soothsayer, but
Hello everyone and welcome to Dhan Ki Baat, an initiative by Times of India and StockGro. I'm your host Ankur Warikoo and we have a lovely panel focusing on a very exciting topic around IPO and what it means for the Indian markets. So we have Sanjiv, Bhasin sir, we have Ruchira and we have Deepanshu. Thank you for joining in. Bhasin sir, आपसे शुरुआत करते हैं. You've seen the market very closely for a really long time. And panel से पहले ही हम जब बात कर रहे थे and you were very interestingly speaking about how the market is shifting and so on. बहुत सारे lately exciting and not so exciting IPOs हुए हैं. And it's kind of made the retail investor थोड़ा jittery कि यार IPO में invest करना चाहिए, नहीं करना चाहिए. What is your larger sense of the IPO market in the Indian setup and how do you think it is going to change in the next decade or so?
Yeah, good evening, Ankur, and thanks for having me here. Well, the stock market is in the pink of health. So we should take it with a pinch of salt that never before in 35 years you've seen all asset classes rise in tandem. Yeah. Be it crypto, bonds, gold, silver and equity. And for us, the primary market has been a new discovery. Now, it also tells you that there are three types of primary markets. Basically, one was the same, the old brick and mortar, which has changed to financial innovation, fintech, and a large part of the new listings have been these fintechs and so-called digital plays, which have made a lot of money for people over a period of time. Some got the timing wrong because of the market movements, but never have you seen that entrepreneurs actually being able to market themselves, which is a big positive. Yes. Now, there will be, a shifting of the men from the boys because at a time when there is a bull market, lot of money which is maybe not deserving the premium will also come. And investors generally get caught in the folly that if there is an IPO, it is meant to make money. It is not so. Thirdly, what has been the real revelation has been the SME market. Ankur, people who wanted to raise from 50 to 100 crore would have to go lock, stock and barrel. Now, there is an SME market which has become viable. Initially, in the last 1 year, a lot of those stocks have done extremely well because of paucity of floating stock and XYZ. But I think it's the maturing of the Indian markets. We have got used to exceptional returns, which is now going to be more moderate. But the longer term trend of primary issues of good companies, good peer groups will start to see more action. And if you can raise money, in the Indian context, the demographic premium of retail investors, it's a thumbs up.
Absolutely. No, that's very well summarized and of course coming in from an expert. Ruchira, I'd love to take your view. There's been an interestingly in the digital community, startups if you may call it, but they're not really small enough to be called startups, a shift back to India. Like there were incorporations that were happening in the US, in Singapore, and now they're suddenly realizing that India is a hot market and we could perhaps move our domicile here. And then there is, of course, the primary market, as Bhasin sir also spoke about, which has always existed. How do you see this new wave of industry/players coming in, wanting to ride on this Indian market, and the traditional primary market, whether it's SME and, of course, large setups, balancing each other out? Are they in conflict with each other? Are they hand in glove? How is the market receiving them?
I think the overall macro for India is very strong, and that is a story well understood, well touted, but it's worth reiterating in this context. Please. Right? The reason people are coming back because the fundamentals of the country and the fundamentals of business prospects in the country continue to be strong. I've been a venture capitalist for a very long time, so I'm going to talk about the other end of the spectrum, the companies that are at super early stage and how venture investing prepares them to the point where they can finally be listed. And what's very relevant and top of mind for everyone, the digital economy startups that have made that journey from early stage to growth and finally to listing. The macro of the country matters a lot for their journeys, right? Because it's not just about, the fact that at listing you will get buyers for paper from international markets, the domestic acceptance of paper, retail participation in the IPO market, which while it's growing, is still at minuscule levels today compared to any other market globally. That gives you some of that demand. But also, those businesses become more robust businesses because of what the macro sort of affords, right? India has a strong demographic dividend. We've talked about that. India now has the DPI, which is exemplary and is setting the standards globally. India has a very mature base of founders who've learned their lessons over cycles, and investors like myself who've lived through several cycles and have learned from the mistakes we've made. So it's a much more mature ecosystem, and that leads to a better quality businesses being built, which then leads to better quality businesses being listed. So the risk that remains still to be addressed is mispricing of those businesses. Yeah. And some of the bad stuff that we've seen in the maybe 18, 24 months ago was because it wasn't that those businesses were not good. Those businesses were poorly priced. And the two things are not the same, right? So I think where we need to all be careful is ensure that the fundamentals of the business remain strong and ensure that they get to market at the right price so that when the retail investor participates, there is still upside left for them to gain from.
Absolutely, which is very well said. And I think that's a conversation I do want to come back to. But Deepanshu, being a academic, I'd love to get your view on this very interesting phenomena that India is, at least in my opinion, experiencing for the first time. If you look at the stock market in the US, it's dominated by technology giants and they've been there for nearly 15, 20 years. Indian stock market is dominated by services, financial services, IT. And it's for the first time we're witnessing these digital economy players who are low or no profitability, are insane PEs, pricing is quote unquote out of whack, and they are now IPOing for the first time, entering primary markets, and retail investors are there. It's not something that the market is used to. It's not something that we have even seen in the past. Like Make My Trip and a few here and there are the only listed technology companies as such. How do you see the market receiving them? And is there any perhaps comparable in the world where it went through a similar cycle, or is it something unique to us? What is your view in terms of your understanding?
Yeah, thank you, Ankur, and thank you, Niti, and the organizers. My observations here and would be more sort of contextual to the history of how cycles of irrational exuberance work in the stock market. And my principal observation with respect to what we are seeing with fintech, which has dominated the scene, but other companies like Nykaa, Zomato, others been there in what is being called as the new age technology companies, is very similar to how we've seen tech bubbles in the past. I would not be surprised that we are in the experiential space of one, and there is some evidence of that when you're seeing value erosion for shareholders happening the way it is happening. And if you see what happened in 2020 and 2021 and then 2022, there was excess liquidity in the market, which was coming from the post-COVID period. Interest rates were low. But as that is now all moving away, you're seeing a different reality, which is from a macroeconomic point coming in. Now, a lot of the point that you raised earlier, that a lot of companies are looking to India because of that elevated uncertainty. And India is one of that investment hotspot. It has the potential interest of many. What I'm finding it difficult to see is that it is translating a lot into hot money, frontier market centered investments, and less which is based on commodities and other short-term temporal cycles of big investment pushes, and then you'll see big returns, as Sir was pointing out earlier. But then what happens is that from a medium to long-term perspective, the viability of fundamentals and the mismatch which was being spoken of, I think is the key. And you're seeing that with the regulatory risks that the RBI is pointing out to fintech companies. Yeah. I'll give you one short example. You see, 2014, RBI had its list of rules for payment banks that was released. Right? The rules were very specific and clear. A payment bank could not take deposits beyond 2 lakh rupees. You could not lend money. So it was all done to ensure financial inclusion actually in the rural areas and the semi-urban areas. What you started seeing from the same company was not sound business practice, which is the company in the question of all we know. And as a result of that, a pop-up of red flags came up for almost 5 years, to the extent of what we saw this year happening. So it might worry a lot of fintech companies, but I'm not seeing that this is something new. You've seen phases of that happening. The US has been full of those episodes. But India had late 2000s a very similar sort of a cycle. Like, it's not winning big projects at even the real estate level. It's about carrying those projects with profitability and margins that you're confident of as a business entity. Right. And that's not really happening as of right now.
Perfect. That's well put together. I want to take a moment and, let's say, represent the retail investor. And an IPO attracts a lot of attention. Like, there is this buzz around it. Of course, everyone's going road showing and they're getting all the books in order. Then there are, of course, ads out there, everything. It almost seems to the retail investor कि भाई अगर इसमें invest नहीं किया ना तो कुछ miss हो जाएगा. And ignore to some extent what is happening in perpetuity, which is earning handsome returns, is perhaps lesser risk and so on. As custodians of this market in many ways, if you had to speak to the retail investors for the next decade in this country and give them the pros and cons of what the IPO or the primary market stands for, what would be your message to them? And Bhasin sir, let's start with you.
Let me tell you, when in my lifetime did I see 18 to 20,000 crore SIP coming in every month? 18 to 20,000 crore has meant that the FIs or the foreign investors who used to call the shots have had to, lick what they spat and went. Honestly, yeah. I said, and I've quoted this, that is, they are the dumb guys. They sell low and they buy high. It is the retail investor who's just seeing financialization of savings. Yeah. This is not going to reverse for the next 3 decades. Wow. Out of 140 crore, you have 14 crore DMAT accounts with 8 crore operational. Yeah. I mean, we are at the tip of the iceberg. Secondly, every household has 4 asset classes. Gold and silver, which is emotional, what comes in doesn't go out. Yeah. Fixed income, which today cannot beat inflation. Real estate, where it takes 30 years to create a house unless inherited. Fourth is equity. The only asset class where the compounding effect and 1,000 rupees can make you money. Yes. So even though we feel that some of these, like she pointed out, there is irrational pricing or it is not, because it's a herd of people. The investment banker, the venture capitalist, they all want the bigger buck for the listing. That is part of the process of the maturing. But my pros and cons are, A, listed companies are today very, very transparent in what they are doing. It is not on the bygone years. I remember years where you didn't know the credentials and you invested. Reliance Power had nothing on the road and it was a hit. Now, those are signs of bubbles, which may be there. But we are nowhere near peaks, because the retail money is now being guided because investment advisors are there. A, B, there is transparency. SEBI is overlooking the whole, gamut of from grassroots to the highest. And fourthly, the only way he can own stock is through application if he goes in the secondary market at 3,000, it is impossible for him to buy Reliance. Yeah. So he's buying the units of the mutual fund. Pros are that if you do your systematic investment and have a longer term view, you will make money. Yes. Cons are, don't get conned by just what you watch on TV and what you watch on people, because they will be hard selling everything. In the end, it is liquidity and it is your hard-earned money. Do your diligence, meet your fund manager. These are today financial advisors are a must. So we feel financial literacy, education and guidance. These are 3 things which you must follow.
Absolutely. Very well said. I love the succinct answer in there and very impactful. Yes, Ruchira?
I would build on the last part of what you said, because that was my first thought when we asked about the message to a retail investor is the research bit, right? I think the retail investor may not be fully aware of the quantum of information available in the public domain today, right? So for every new listing that comes out, there are a bunch of filings that the retail investor should read. And I say yes, rely on your financial advisor, but also rely on your own research of the particular name. There is stuff available in the public domain. My favorite reading has always been equity research reports, right? And in fact, even as a venture investor, when I've had to work with startups that were making their way to listing, the biggest focus was who's going to cover the stock, who's going to issue the initiation coverage report, which I think is my favorite report to read. Right? But people may not have that same time available to them. Nevertheless, I would encourage every retail investor, do your own homework, put the pieces together yourself, and then determine if this is a business that will ultimately make sense or not.
Yes.
Because I think it's in the long run too, it's the good solid businesses that will make money.
Absolutely. Very well said. Deepanshu?
Yeah, my observation would be this, that in terms of not looking at just pros or cons, but if you look at the pattern of retail investors coming in, there are three big states which are now contributing on a 22% year-on-year jump you're seeing in retail investors. Bihar, UP and MP.
Yeah.
Bihar is 36%, I think UP is 35, and MP is roughly around 29.
Wow.
These are the states with the least amount of educated, financially literate populations, and we have to ask the question that the decision-making apparatus which a lot of people are making in investments in retail sector, where is that coming from? And I'll give you the answer, because a lot of us, when we're doing fieldwork, we're understanding that YouTube is the biggest information producer and consumer, and you'd know it better than anyone. As a result, there is very less discourse, and I'm glad we're doing this. I ought to say that it has to be multilingual. The information sharing mechanisms need to be much more disseminated amongst the classes. And I would caution that too much of equity linked investment, as important as it is for the markets, has its trade-offs, in the sense of the average Indian retail investor would look at high returns in a shorter period of time. But how many of them are willing to wait the long watch? I think that's a big question, which any sound financial advisor would point out. Having said that, what is happening to the interest rates of banks linked savings? And my sense is that inflation there is a big key factor, which is the sort of the silent elephant in the room, in the sense that you have to talk about to what extent the Indian economy overall in the next 10 years, how does the macroeconomic health of the economy gets linked to the optimism that you're seeing in the markets. And right now, I mean, as economists are telling you, I mean, I'm not different in that regard, that there is a disjuncture in terms of what you're seeing in the financial optimism and the actual investment potential, because most IPOs are coming from Maharashtra and Gujarat. And if these look at these two states, the investment numbers haven't picked up in the last 10 years as it was anticipated. So we have to see, we have to see the next 3 years, I feel, are very critical for that regard.
Wonderful. Fantastic. Before we end, this will be a little of sensationalism that we have to bring into every panel. We have experts, and it's very rare to compile this. We're recording this on a day when Sensex has hit 75,000. Who would have thought 10 years back at 25K that this would happen? But here we are. We're in 2024. Give me a year when you think we will be at 150,000 Sensex, double from where we are. What do you think, sir?
So I'll just give it a small point that it took us 70 years to reach $1 trillion. The next 10 years took us to 2. The third came in 5. We've hit, in the next 3 we hit 4, and we'll hit 5 in this year. That is the power of compounding. Now, you're talking of $10 trillion. Morgan Stanley did report says 2031. I would bet 2032 could be $10 trillion, which is not very far.
Very far. Wow.
And that is purely on the basis that 3 things have changed. The demographic premium for India, the transparency, and the acceptance globally that we cannot have $100 billion just 3 companies, whereas Microsoft itself at $3 trillion is almost 75% of your market cap. We are not going to reach there overnight, but I can tell you in the next 3 years, Ankur, there will be a plethora of companies whose market cap will reach on performance, on earnings, and on the demographic premium.
Fantastic. Wonderful. Great. That's a prediction. 2032?
2030.
2030? All right, you're a lot more optimistic, Deepanshu.
I'm an academic. I'm not an astrologer or a soothsayer. But Mr. Bhasin has already, I think, pointed it out. I would just say, look at the distributive equity of the class of what the Sensex is saying and the purchasing power of the rupee.
Yes.
That for me are the only 2 pointers that we have to look at. Doesn't really matter you hit 10 trillion or 15. What you really have to see how much of that you're buying with that.
Absolutely.
And if there's any proof of that, the consumption expenditure survey is giving you a very good sense of what's happened in the last 10 years.
True. Absolutely. Great. On that very balanced note, I would call this panel to a close. Thank you so much for joining in and sharing your very valuable insights. This is Dhan Ki Baat, an initiative by Times of India and StockGro, and this is your host, Ankur Warikoo, signing off.